Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Lab.com. Welcome to today's recap and look ahead. So we basically started the day off on a quiet note. S&P futures was down about 3 handles, and it was a pretty quiet day. You know, there's definitely a lot of divergences that are adding up, which makes it a little bit harder to sink your teeth into some of the things that are acting really well. What do I mean by divergences? I mean, you know, the banks are weak. IWM is definitely on the weaker side. The XLE weak. You have the TLT stronger today, and then you have the leadership getting more narrow and narrow. So with that said, doesn't mean you could be, you know, cajones to the wall short, but it makes me think that after 7 up days, you might want to reduce a few things, have a few less positions. So that's kind of the way I went, you know, into tomorrow. I think I was long like 7 or 8 longs with a spider hedge, and now I might be in 3 or 4 longs, and I still have a spider hedge just for now. So anyway, you go to the chart of the S&P, you know, really not showing you any reason to like be all in short or be so, you know, complacent or be so bearish. You actually have a nice consolidation here above the prior breakout. So to me, that's still constructive for the bulls, still above the 8-day, still above the 21-day. But sometimes you get some kind of, you know, I don't want something like this to happen. I remember last time. I'm not saying it is. I was pretty long, and then you had a little bit of a, you know, complacency shakeout into the 21-day before going again. So at this point, you know, it still looks okay, but from this red dog reversal down here about a week or so ago to where we are now, you know, you can be a little bit more careful. Okay, you know, obviously we pointed to this area, and that was when, you know, the sellers could have rejected the bounce to go lower, and they didn't, and that's what helped lead to the move that we have. Why did we have a little bit more of success getting above 2,400 this time here? Because a lot of guys were stopped out, so they were less long and had to chase back in, and some guys who probably shorted the rally off of, you know, this move lower rolled it up to add some fuel to the upside. So anyway, as of now, still looks constructive, but I would just be a little bit careful with some of the divergences. What do I mean by divergences? You have S&P, SPX at all-time highs, and you have, you know, the IWM getting rejected here into resistance and rolling down today back below the moving averages. It doesn't mean it's broken and dead and going to crash, but it just means that it's just not leading the market. Last time it was at highs with the S&P. This time it's not. So it's just telling you it either needs time or you just have to avoid it for a while. Here's your major support where more of the bears would get a little excited if it broke below. I'm not saying it is going to happen. I'm just saying at this point, no reason to be, you know, actively long there. The banks also, you know, definitely a bit more lethargic, still below the 50-day, still not they're not falling apart, but just not able to break above that. You know, you have the S&P at highs, and banks are well off the highs. So, you know, the bears really need to sink their teeth into this down here and break this if they want to bring a correction to the overall market, which they haven't been able to do yet. So we shall see. Overall, just a relatively weaker, you know, day for the XLF. The Qs remain the strongest, you know, sector, best in breed. Just kind of, you know, working its way higher. It's a little extended from the 8-day. It's definitely well above the 21-day. Here was that little, you know, down move that got bought real quick at the 21-day. Didn't even get to the 50-day, so it showed you strength, and now it's trickling. Last time it, you know, trickled all the way up, it did it for 15 sessions before that. So just don't try and be a cute short because you think it's going to happen at any time. Just, you know, again, you don't want to be all in after. If you didn't buy it on this day, or didn't buy it when it reclaimed the 21-day, or didn't buy it when it took out this pivot, you know, don't be all in, you know, on this little small narrow range bar. So let's just go to stocks. You know, Apple I bought today, but I didn't take home. It's still, I don't like when Apple lags. What do I mean by lags? You have the S&P made all-time highs late last week, and did Apple? No. So to me, you know, that's telling me just to wait and see. There's still some talk what's going to happen here with, you know, the iPhone 8. Is it really coming in September, or is it getting pushed out? So at this point, you know, still showing a little relative weakness. I did try it today. It looked decent with the big option, you know, news that someone bought big November calls, and then it just kind of faded. So I was like, you know what, I'm going to wait and see. You know, I don't like when Apple, not saying it's not a big deal that it's not at highs and leading the market, but for me on the active basis, you know, I'm not talking about investment-wise. I like when it leads, and it was leading right here. You know, you had your nice little red dog reversal, took that out. Here, you were able to buy the 8-day. Then it took this out. And ever since then, it's just consolidating what's been a big move. So at some point, you know, we get a little clarity on the iPhone 8, or some clarity, you know, on what's going to happen at the WWDC, whatever that, you know, the conference next week. maybe a strong close above this gets me back in, but for now, I'm just going to be a little bit more in wait and see mode versus just a big position. Amazon, I've had it for multiple days. You know what? I didn't take it long tonight. Just, I don't know why. I don't think it's the end of the. It's not a big deal actively. It's having a little trouble here at 1,000. It's extended from the 8-day, extended from the 21-day. So I'm always a little bit more careful when it is, because it could always pull back to this and be fine, and then break above 1,000 and go. Too many people are way too focused or hyper focused on it. So for me, I just said I'll get out and I'll readjust and I'll figure it out tomorrow. Maybe there's more volume, maybe it trades differently, but for now, as it's a little extended, I'll just wait and see. Facebook still acts well. Last week was a really nice pickup for a lot of guys in Redler All Access. I also did that Volume 1 report right here for this nice breakout. It did hold in pretty well today, so I'm still in this one. I do think at some point you could take this out. A little bit more sideways action and maybe it gets going. That obviously means that the market's not going to fall apart, but technically on an active basis it looks better. Here it was in a corrective phase. King and Queen's formation had to wake up. This was your day one break the descending channel, and now it's still looks pretty good. Netflix, for those of you long, stock had a big gap up on an upgrade and still held that gap, and stock's been trading well ever since breaking above this channel, which was about 4 months in the making, and now it still holding the 8 and 21 day. Just got to pick and choose your spots. Tesla was the trade that made us a lot of money the past 3 days. Why did it make us a lot of money? Because we focused on it reclaiming the 8 and 21 day right there. I think I was actually long here, added there, and I just took it off today. Okay, so I'm not long Tesla overnight, even though it looks good. If you weren't long it today, you didn't have to be. You could have actually bought this pivot here, at 327 and got paid. Nice day trade or a nice add, but 1, 2, 3, 4 days up, I typically get a little bit cautious and I sell. Doesn't mean you could be short. Just means I'd rather take some off as it's extended from the 8 and 21 day, and I'd rather buy it when it breaks above it, add to it when it breaks above a pivot, and now here, could it get to 340 tomorrow or 345? Yes. Will I be a little bit upset of how much I had here? But that's my system. If it opens down tomorrow with some kind of move in the futures, maybe I'll buy it if it retests this 327, 328. But for now, I am flat that. Snap's been actually acting better too. Nice little bull flag here. This was when I was pointing it out, saying my little gut tells me it fills the gap. Well, it filled the gap, and it still holds in there. So I'm still long Snap. Not actually the most quality name, but could continue if it wants to. Held where it had to today above 21, and now we'll see if it continues to the upside. Same thing, Twitter. I'm in like the third tier names. Twitter, I got back involved Friday, so I have a nice cushion while I get back on Friday. It pulled back, held a 21 day, pushed up today. Don't think it's going to be getting back up to here anytime soon, but it was a decent trade. I have a little less on overnight, but I'm still in it versus that spot. Just something to do here and there. Then what else were people talking about? Oil, the XLE looks horrible. Why does it look horrible? Because it keeps, not horrible if you're short, but it's been below the 50 day. So every time it gets up here, it's been more of a short than a long. If you were long it right here, once it broke that pivot, that was your stop. Now it's right at lows, which is another reason why I'm a little cautious, because you have the XLE making lows of the move. You have the small caps. You have the financials kind of lethargic. You have a lot of the key sectors, and not even that key, but diverging. So I feel like they might be lulling the bulls to sleep by, the road to 1,000 in Google and Amazon and underneath the surface selling things, and then all of a sudden they come in and sweep you out a little bit on a bull surprise. I'm not saying that happens, and don't play yourself short for it, but after 7 up days, why not have a little less risk so you could trade if some volatility hits? So in closing, a very quiet day, very specific day. It's been that way for a while. If you enjoyed the move from the red dog reversal at the 2356 pivot and traded some of these high beta names up to highs, you could be in a little less. Try and stay with the move, but just be a bit more careful. We'll see what happens overnight. I'll see you at the Morning Call Express. Have a good one.